So in my last video, there were a few questions in the form of comments, and I thought that since the market will be closed on Monday, it'll be a good time to answer some of those queries. Because in the process of answering those queries, I believe that certain similar questions would also be addressed, and someone has taken the effort to articulate the question, so it might be possible that all of us will benefit from this little Q&A session. So one of the questions here is, hello sir, thank you for your analysis. I have some questions if you can answer. Is this system or strategy consistently profitable? Now, so like we discussed last time, that any trading strategy has 5 broad components to it. All right. This is something that I have covered in detail. They are trend, momentum, your support resistances, which I will just call pivot points. That is critical points. You could think of them as critical points, which are supports, resistances. Then obviously there is volume, and finally there is price action, such as gaps, candlesticks, patterns, etc. Now, any trading strategy has these 5 components to it. Now, how have we tried to determine trend in our strategy? That is using an ADX as an indicator in the strategy that I have outlined in the previous sessions. And the next thing is, how do we attempt momentum in the chance that someone is using multi-time frame technique? If that has been explained, if someone is using multi-time frame trading, then we have used RSI in order to. So for example, by using 15 minutes charts, we mentioned that RSI of 4 should be less than 30 for us to consider something to be highly oversold, and greater than 70 for it to be highly overbought. All right. Now, however, how are we determining critical values? We are determining them through 2050 SMA, right? We are using the 2050 period moving average in order to determine critical values. What about volume? There is no weightage or negligible weightage given to volume, because by virtue of assessing it on the index, it is reasonable to assume that it has the maximum interest in the country. So there is no weightage given to volume. We are not using volume indicators such as AD or check-in money flow, or even a simple volume bar chart is not being used for this purpose. And finally, price action, once again, it has no weightage. In other words, our bias does not change because we see a double top or a triple bottom or a flag pattern. We use this as an information. For example, you would recollect that in our previous video, when we were headed into a long weekend, I had mentioned that the security is in a range, and generally ranges resolve in the direction of the preceding trend. Now, this is information, but like we said, that even though we have that information, we did not take a trade based on that information. Or when the range broke, I also mentioned in that video that it gives Nifty a target of, let's say, 23,750 or something. So if I so the best trade would be to write 23,750 put. Nifty eventually reached there, but we did not take that trade. In other words, price action is revealing some things to us, but we are not giving it any weightage in our final order execution. Now, these are the 5 components of our trading strategy. You could argue that you do not like ADX, you want to use, let us say, some other kind of an indicator, or you don't want to use indicator at all, you simply want to determine trend using Dow theory. I agree. This is totally fine. This is completely fine. I believe that if you're analyzing trend on shorter time frames like 1 hour, 15 minutes, a mechanical indicator makes your life simpler. But if someone wants to assess higher top, higher bottoms visually, by all means, that's a well-proven technique. Someone could argue that I don't want to use RSI as a momentum. I want to use stochastic or check-in money flow or percentage William R. I agree with that too. It is totally fine. The reason why I use RSI is because it is a very, very popular indicator, and many individuals have an interest in learning this because many books are written on this. This is clearly an indicator that is at least 30 to 40 years old in the industry, and usually this forms the base of many other indicators that are created. So if you, for your system, do not wish to use RSI, that is by all means totally fine. The other part of it is RSI 4. I have given the logic. If you do not agree with it, it is fine. instead of using some formulas, for example, some of you have seen my, I don't know, upsurge courses, videos, etc. I have given formulas for pivots, support, resistances, Fibonacci, standard, etc. Instead of using all of that, I have simply used the 20-50 moving average, because we are using a trend filter, that is, we want a trending security. I'm saying that the moving averages will also act as reasonable supports. You could disagree with it and choose to apply mechanical formulas, which is also fine. I have not given any information on volume, which is a limitation of the system. And the fact that we give no weightage to price action either is a limitation, but also a strength. It's a limitation because obviously we are not planning a pattern trade anymore, but it is a strength because it frees us from our discretion, and we don't have to apply the intuitive part of our thinking, which means that if we are satisfied with this performance, we can mechanically replicate it into other securities. You would note that all of these variables, for example, ADX should be greater than 25. All of these variables are very easy to code. But if you start using discretionary elements, such as saying that there should be a wedge pattern, then the very definition of wedge pattern into a system becomes very difficult to code. And you will find inconsistencies in one trader and another trader on an agreement whether the head and shoulder is actually even a head and shoulder or not. So when two experienced traders could disagree with that, think about you writing a code to tell a particular software to identify a head and shoulder pattern for you. There could be a lot of discrepancies in that also. So now these are the components of the system that I have taught in these series. I have kept them consistent so that we become better by virtue of practice, and as price action changes, how our assessment changes, that becomes on record and a reference case studies for students of the subject even on a later date. If you disagree with them, it is understandable, but if you say that you are not going to analyze the trend, you are not going to check critical values by pivot, you are not going to see if it is overbought, oversold, and yet you are going to take a decision in the market. Now here my point will be, then how is this technical trading? How is this even technical analysis? What is the application here? So the fact that we are using well proven techniques obviously will be profitable, will break even. And as I have mentioned, that in order to truly make something profitable, you will have to execute the order on days that you are highly comfortable to execute them. It is very easy for a trader to say that, April 2nd will come, Trump will include tariffs, so I will stay out of the market because it is going to be highly volatile. Or maybe perhaps some state election will come, so I will stay out of the market because it's going to be very highly volatile. But if you see it from my perspective, it is these events that make or break the entire financial year for you. It is your participation in these events that determine whether or not you're going to truly make money in the markets or not. So staying out of these events is simply not a viable option as far as I'm concerned. It is all about planning and things of that sort. So the point being that we have to use something, and this is what I have proposed. If you do not wish to use these things, you could use the alternatives, which also I have taught and proposed in various courses. And your final profitability is going to be determined by your position sizing, and there is a lot of math behind it. But for a small account, like for an account of 2 lakhs, 5 lakhs, there is very limited room for planning a position. You are just going to be able to take one lot, if not maximum 2, any which way. So there is hardly any plan for position sizing. So you tell me if the strategy is good or not. If you tell me if these components are good or not. If they are indeed good, then tell me how can they not make profit? They are keeping you out of flat ranging markets. They are asking you to buy at critical supports. They are asking you to do it only when the market is oversold, and assuming you're a single time frame trader, let's assume you're a single time frame trader, then in that case, for the single time frame trader, you're not even giving weightage to momentum. So what are you saying? That by the time a security reaches the 20-50 moving average, it will be oversold. This is what you're saying, right? So वो profit बनाने का काम आपका है. That will come with position sizing, that will come with discipline, that will come with timely exit. Alright, so there is a lot of variance in that. The strategy बनाने का काम या एक input देने का काम मेरा है, उसको fine tune कराने का काम वापस आपका है. ये input देने से you will be better than a wide audience of traders. This is my firm opinion on the subject. I am very confident that traders who are using any 1, 2 or all 3, they will be vastly superior to a trader who just wakes up on Monday and out of compulsive habit takes a trade at 9:30 in the morning without any of these filters. There is no argument only in that. So I do not know if it will make consistently profit or not, but I know it can be very, very, very profitable because it is a trend trading system. I know that it can have an accuracy ranging between 25 to 40%, depends on how you trade this particular system. And I know that if you execute 100 trades using this system, you will be net profitable. How much, how smooth will your journey be? These are things that the market will decide for you. We time to time discuss how to make ourselves mentally more skilled to be able to handle all of that. The second question from the same person is, have you made money by day trading on the system and what is the win percentage? So the win percentage I have answered. Have I made money? I will never recommend anything to you in case I feel that you will lose money. Alright. When I was day trading back in 2015-16, I was a 1-year-old trader in the market. Today I am a 10-year-old trader in the market. So there is no ambiguity that it is vastly superior than what I was trading in the market, because when I was a day trader in the market, I used to only trade with price action. This point here, that is, if I saw a flag pattern, I would be trading the flag pattern. I wouldn't check any of these above things. I didn't even know they existed. So I would read up on price action and take up trades on that direction. And like I mentioned, I was profitable in my first year. I was profitable in my second year. So just by trading price action alone, also I was profitable. But why do I recommend this? I recommended this is because the amount of burn, the amount of fatigue that price action trading used to cause me was significantly high. I obviously enjoyed and loved the process, the part of trading, so I was willing to take it on. But today, several years later, I don't feel like working actually that hard. And secondly, as my capital has increased, there is obviously, for the purpose of risk management, a requirement that I enter into multiple securities. If I have to enter into multiple securities, I cannot make a subjective decision making process and take it all across 250 futures. So have I made money using this exact system? I have made money using this exact system. At that time, I was not that good to know that I could have created something so simple. So if I'm sure, or if I'm reasonably confident that this will be a reasonably okay system, then why am I not trading it? Is because I have shared my views on day trading already. That day trading is expensive. That day trading, the role of day trading is to educate you how to handle the various market scenarios. And I think I have done that for some period. And now I trade in the direction in which the market is trending. So if the market is trending in the monthly, I will trade on the monthly. If it is trending on the weekly daily, I will trade on the weekly daily. So this is how I trade. So yeah. The third part from the same question is, as you are analyzing for day trading, it is very difficult for the price to come to the hourly 20 or 50 moving average and then move to give us profit in the same day. So this is perfectly articulated and very good. This is the reason why you will see that since our trade has taken, I have advocated a continuous process of trading. I have always advocated that even though we are using hourly charts to analyze the trade, the cost of trading has become so high that in order to capture a reasonable move, we need to let go of our fear of gaps and take our position forward, provided the take our positions forward, prepared for a gap down if we are long, and similarly someday prepared for a gap up when we are long. So this is because, like you have only articulated, that a security has to, in order for a day trader to make money, not only does the security have to pull back all the way to the 20 or the 50 period moving average, it also then has to recover and rally after that. In other words, when I used to day trade, I used to wait for not more than half an hour in the first part of the day, because I knew that the only way to make money is that the security after the collapse in the morning must stay there for some time and then rally back upwards. This can only happen if the collapse happens first. In other words, let's assume there is a stock at 100 and I see strong support at it at 98 and I want to exit the trade at, let us say, 96. So in the morning, if there is a gap up of 2.5%, 3%, which means I'm getting the stock at 97, 98, I would immediately buy it with a stop loss of 96 or whatever stop loss I communicated. And I would buy it only only and only if that stock reached my buy level within the first half an hour of trading. Now, what does that basically translate to? It translates to the fact that let's assume a stock is trading at 100, which I want to buy at 97.5 with a stop loss of 96. If the stock reaches there from 100 to 97.5 between 9:15 to 9:45, my trade would execute. But if 9:45 am crosses, I would cancel the buy order, which means I don't want to buy a stock which opened at 100, moved up till 103, then came back all the way to 97.5 to trade me in, because I believe that too much of time of the day would have elapsed and my trade will not get enough exposure in the market, only increasing my cost of trade and not giving me anything in turn. And this process continued for some time. Till I eventually started trading commodities which worked for a longer duration of time, and that is the reason why in the immediate short term I became more profitable in the commodity segment than I became in the NSCFO segment. But gradually, as I started carrying forward positions, I felt that this is a hack. This is the way in which traders can make much more money, and for all the money and the risk that we are paying and risk that we are taking, this gives us more bang for the buck. So therefore you would see that I continue my day trading assessment for the day, and if the trade is triggered, I plan the next day's trade factoring in that the trade has already been triggered. Alright, so therefore, as per this, you would note that from the previous video that we would be long, let us say at 23,575, we would be long at 23,000 call. We would want to buy the second lot at 50 period MA. But since it is not currently trending, we are no longer placing a second lot buy order. Only thing we are placing is a stop loss order, which I think we would have mentioned at 23,375 and thereabouts. I hope that's answered the third part of this question. I have one more observation, and that is Nifty has moved almost 15 to 1800 points in a month of March. As per this system, we are not able to catch even 100 points. As per my view, there is a need to make improvement in this system for day trading. So let's do one thing. You make a direct suggestion. You could simply make a comment saying that instead of using the 20 period moving average, I use the 5 period moving average. And therefore, because the security will pull back to the 5 period moving average, I got traded in when the security broke out. And I believe that is perfect, because you are also going to get traded in when the security gives a fake breakout. So this is the trade-off that we will only be able to figure out after let's say 100 trades. So my point is this, that if the market has moved 1500 and 1800 points and you are running a system which could have given you short positions also, the fact that it did not give you any short positions but kept you on the long side, and the only reason why it didn't get traded earlier because the pullback was not happening earlier, I think it is a reasonably fair system. If you are buying a pullback, then there has to be a pullback. If you are buying a breakout, then obviously you will catch the break, but you will catch fake breaks also. So this is a trade-off. Therefore, I had mentioned earlier that this is a trade-off. A trader who buys breakout would have without ambiguity been long at 23,600 in the worst case. 22,600 in the worst case. That is where the breakout actually happened. So if your view is that Nifty moved 15 to 1800 points and we did not get traded, so I think what you need to do is you need to check the videos that have happened from the start, because it's not like we were not getting traded. It is simply that when ADX was below 20, we were writing options as a part of our academic practice, and when Nifty broke out, we had no options written. We wanted to buy the option, but there is no pullback. The pullback happened actually just 2 days back, and that is when we are in. So if market gives a 1500 point breakout and then gives a pullback, that is actually when you're going to enter, and that is the moment of truth that was discussed earlier. So I hope I have addressed this question. Good or bad, system banane ka kaam is yours, and that has to work for you. If I give a 5 period moving average system, it is going to be highly sharp, highly volatile, then I'll have to make a video every half an hour. But even I want to make a video in a manner that when I make an assessment, it doesn't change for a couple of days, so that the audience can absorb the content and things of that sort. So there are constraints for all of us, and this is why the system that is proposed is keeping those constraints that I believe you have and that I feel that I have in mind. Another question, sir, you mentioned on Friday second lot wasn't triggered. By that means we are supposed to trail or limit our orders once a day only. If yes, then what about instruments which are 24/5, example gold? So the decision to trail so let's say for example your SL is basically equal to the 50-hour MA minus 1 ATR, 1 hour ATR. Now, assuming you are tracking the market every hour, you can update the SL every hour because the 50-hour MA and the ATR value will change. But because as an individual, I don't feel like doing that. I don't feel like checking the market every hour. I don't think so. I'm going to check the market at 9:15, then 10:15, then 11:15, then 12:15. This is what I feel about myself, that I wouldn't do it. So I will simply change it after 6 hours. In other words, the SL formula remains the same, but in the videos that we are creating, the period of updation of SL, updating the SL, is basically 6 hours. Now the question is, should I do it every day? Should I do it every hour? I will leave that up to you. Of course you can do it every hour, but then someone needs to be updated every hour. But now let us say for example you're going on a beach, or you're going for hiking, or you're going for a movie. Then do you really want to be checking it every hour? And that is the point of trading, right? That we could engage into activities with reasonable confidence while taking positions in the market, and yet be involved in activities that we actually like and might be good for us. So this is what I feel. And yes, the second lot wasn't triggered. We were looking to place the order for the second lot for the next trading session that will happen on Tuesday, but unfortunately the ADX value was below 25, and therefore we are not placing the second lot order, and all we are carrying is a single lot and a single SL as per the system that we are discussing. What is your view regarding the broad market indices? Broad market indices here would mean Nifty 50, Nifty mid cap, Nifty small cap. Which means that the stocks included in these indexes are not necessarily from a sector. So Nifty could have Sun Pharma from the pharma sector and TCS from the IT sector. So that is what it means. So they will include large stocks or stocks which meet certain criteria from all sectors. So what is your view regarding broad market indices for the coming weeks? If I have to form a view for the coming weeks, I would look at the hourly chart. And I do not know about all broad market indices, but definitely Nifty 50 that we are discussing. My view is that it is currently in a range with a long bias. Why? Because you would remember that we discussed in the earlier video, whenever a security ranges, it has a predisposition to resolve the range in the direction of the preceding move. That is how we got the initial 23,750 targets and things of that sort, because we saw the security ranging after it moved up. Now this is the second time the security is doing that. It is ranging after moving up. Now of course it could resolve in the direction below. It could do that. But if you were to ask me my view, then my view is it is along with a range bias. And as long as it is along with a range bias, still how long am I along with the range bias? I will be long with a range bias till the price trades above this value. If the price is trading above this value, I am saying it is up. If the price goes below this value, then I am not saying it is down. I am saying it is not up. This is all. So as of now, this is my view, long with a range bias. And how do you know that? Because I have only one lot, which means I bought when it was trending, but I cannot buy because it is no longer trending. So our positions are the reflection of our view on the market. I feel like it's going down. See, now, what does I feel? What does it mean? You see, there has to be some objective purity on what we are doing. If we are going to use this, like if we are going to use these strategy components, then where is the question of feeling? Like, how do I feel anything different if ADX is below 25 or above 25? If it is above 25, I feel it is trending. I feel that, that it is okay to feel about things where your subjectivity is appreciated. But what is the decision that you can take in the market? You can only take a couple of decisions, either buy or not buy, either sell or not sell. If you have bought, then you could book, or if you have sold, you could book. These are like a handful of decisions that we can take. They're very finite number of decisions. So in other words, this calls for objective decision making, and therefore I feel like it's going to go down again should warrant limited space. Because how do you develop a framework to articulate your intuition. See, that is very, very key. I feel like it's going up is because maybe these criterias are meeting. Okay. And these criterias should direct in the direction of up. I feel like it is going down. You need to have certain criterias which are meeting, and of course you have articulated these criterias which are meeting. Since both Nifty and Sensex touch, so first of all, Nifty and Sensex are highly correlated. If you have securities which are so highly correlated, obviously including them in the same argument does not strengthen the argument. So I would just say, since Nifty touch the resistance, so if something is touching the resistance, I think that's a good thing from the long perspective, and traded below the 21 and 50 MA on the 30-minute time frame. This is perfect. Like I said, that we discussed these 5 trading components, and the time frame obviously in which we are discussing this is the hourly, and therefore I have the view long with a range bias. This is my view, and my positions are accordingly. Now if you are doing it in the 30-minute time frame, then obviously it is possible that you don't have this view long with a range bias. But is it a bear? I mean, is this a bearish? Like, is it like ADX above 25 with a bearish crossover, and are these things playing out? If that is playing out, then of course you could have a view that the market is more likely to sell. But I don't know. It's difficult to imagine that a security moves up 1,000 points and gets into a bearish, strong bearish right away. It is possible. It is possible because you're looking at the 30-minute time frame. But since these videos that we are creating is looking at the hourly time frame, therefore this is the view, and consequently, I would feel that you are entitled to the views, but our views really don't matter in the market. How we behave is the only thing that matters. And I hope that these videos that we are creating, the Q&A and any other discussion that we are having, is helping you create a clear plan and execute that plan, and obviously hope for the best in the process, rather than going about randomly, like just it's just 11:30, I have to do something, so why don't I just buy one option and see. So just to change that attitude and to give a bare minimum structure, this is what this objective of the videos is. Of course, if individuals would like to learn more in detail and things of that sort, you are welcome to check the link in the description of the mentorship that I had just taken with the batch recently. I feel that was a good mentorship because of the batch that came. There were approximately 30 to 50 students at any given point in time, and I think they were like in general they have asked a lot of questions which I think could help a lot of people, and we tried to objectively make a plan based on those Q&A. So it's not just pure theory, it is how we try to build a slightly better system based on the market scenario at this current time. That was the attempt, and I think that overall it was a reasonable. I had a great exposure, I had a great time, so that's the reason why I recommend it, and I have linked it in the description for the purpose of those people who are really looking to quickly get done with the learning graph and just put to action using some frameworks that are outlined. So with that, I hope you have a great holiday and a great week ahead. Thank you for your time. Take care.